Hello and welcome to the show. Today is June 28th, 2023. Let me start by saying that I'm not a financial advisor. This is not financial advice. This information is, of course, intended for entertainment and educational purposes only. Today we'll be talking about stock symbol MMTLP, or what used to be stock symbol MMTLP, and what is now the private company Next Bridge Hydrocarbons. The news of yesterday is that MetaMaterials retains Christian Smith and Jewell LLC, or LLP. And what does this mean? Basically, this was the press announcement from MetaMaterials, and the announcement was that MetaMaterials, which is a nanotech company, has announced that they have retained the law firm of Christian Smith and Jewell LLP to help investigate allegations of naked short selling of MetaMaterials stock symbol MMAT. Meta has completed an initial trading analysis with ShareIntel Shareholder Services, and as part of its continued commitment to protecting investors and maximizing shareholder value. I'm just going to read the rest of the press release. It's a short release. It's not a big deal. Through ShareIntel, Meta was obtained. Through ShareIntel, Meta was able to obtain trading analytic metrics, and its analysis has seemingly identified trade imbalances in the trading of MMAT shares, which are potentially material relative to Meta's public float and average trading volume. Quote, "We have reviewed the preliminary report from ShareIntel, and as a result, we have engaged the services of Christian Smith and Jewell in the best interest of our shareholders. We believe Wes Christian and his team will offer us the most effective solution in addressing potential instances of illegal trading, particularly by naked short sellers, either in our shares or those falsely represented as ours," said Jack Harding, chairman of MetaMaterials. Christian Smith and Jewell has a proven track record of representing publicly traded companies facing challenges related to illegal naked short selling, counterfeit shares, and other fraudulent activities. Notably, the firm successfully represented Overstock.com and Taser International in lawsuits against prominent Wall Street institutions, including Goldman Sachs, Merrill Lynch, and Bank of America, resulting in settlements. And some other info about the history of MetaMaterials. So to fully understand what's going on, and what's being talked about, we need to go over MetaMaterials history a little bit. Now, most people who are watching this video are MetaMaterials shareholders, so they are very familiar with the history. But I think it's a good idea to go over it anyway. It won't take long, but it describes exactly what's happening, and it brings it all into context. So, we have two companies, MetaMaterials, stock symbol MMAX in Canada, and Torchlight Energy, which trades in the US, which merged to form the company MetaMaterials. So as a result of this merger, we see there was a Series A preferred shares that was provided as a dividend to all original Torchlight Energy shareholders. Okay, so if you were a Torchlight Energy shareholder, you would have gotten a Series A preferred shares. And it's basically a spin-out of the oil and gas assets from Torchlight. It was provided as a dividend to Torchlight shareholders. Okay, the only way to get it, of course, was to be a Torchlight, or to be an original Torchlight shareholder. So the stock was never meant to trade. It was meant to be a preferred share, and that was the original intention, right? However, two market makers naturally got together, and they decided to start trading the Series A preferred shares under the stock symbol MMTLP. This was, of course, against the wishes of the issuing company, which was MetaMaterials. And MetaMaterials, of course, complained to FINRA, and FINRA said, "Oh, well, F you. Unfortunately, these guys have gotten together and started trading it. There's nothing you can do about it." It turned out that when they filed the paperwork to get it trading, the paperwork was filed incorrectly. It had outdated and incorrect information on it. And FINRA said, "Well, if you want, you can correct the information." To which Meta basically said, "We don't want to have anything to do with the fact that it's trading. We're not going to fix the paperwork of the people who got it trading because it wasn't us. It was basically a bunch of market makers." Now, why would two market makers get together and out of the goodness of their heart try to trade these shares? Is it because they wanted to make the world a better place, or is it because they might have had a short position in Torchlight Energy and wanted to close their short by by obtaining these cheap shares, by obtaining these Series A preferred shares from shareholders who might not know what's going on? There was no press announcement about it being trading. There was no information as to what this MMTLP shareholder was. What this MMTLP shares were. Nobody knew what they were. There was a lot of confusion about it, and that was created by two market makers who got together. Okay, So this thing starts trading by itself, and over time it comes out that yes, these are the Series A preferred shares. Not everyone was aware of it. Not everyone knew that it was Series A preferred shares. Again, there was a lot of confusion about it. So time passes, and then Metamaterials decides, hey, because they are now the merged company between Torchlight Energy and Metamaterials, that they would like to spin out these oil and gas assets, because they are, of course, a nanotech company. They want to be a green company. They don't want to have anything to do with oil and gas. They want to spin out these assets. So they issue a dividend of the private company Next Bridge Hydrocarbons to all MMTLP shareholders. Okay. Now that dividend was issued in December. The Next Bridge Hydrocarbons shares that were issued to MMTLP shareholders. Let's be clear about this. The MMTLP never traded. FINRA currently says there's a short position which exists in Next Bridge Hydrocarbons. So if a short position exists in Next Bridge Hydrocarbons, and Next Bridge Hydrocarbons never traded, this means that the dividend that was never issued fully to every single MMTLP shareholder, right? It's now been over 200 days. Now, Metamaterials fully issued the dividend to every single shareholder. That's not a problem. They issued 165 million shares. How many millions of short shares must have existed, right? Or hundreds of millions of short shares must have existed for brokers not to issue this dividend to MMTLP shareholders, right? And we know that the short position exists. FINRA has admitted it. Okay, FINRA has admitted that the short position exists in Next Bridge Hydrocarbons. This means that the dividend of Next Bridge Hydrocarbons was never fully issued to every single person who purchased MMTLP shares from their broker. Okay, that's the fact. So what happens next? Well, because of all of these problems, there was a entity that was formed called Flamethrower LLC. Basically, it's John Berta, Greg McCabe, and two or three other large Torchlight shareholders. They got together, and they retained the services of ShareIntel and Wes Christian to investigate naked short selling. Okay, this was the tweet by John Berta. He says, "Hey, background, himself and a bunch of other OG TRCH shorts have funded the DD process with Wes Christensen and the team. We'll go where the DD leads us and make appropriate decisions once we have the data. We're not afraid, and we're ready to take action." This was around January of 2023, January 18th, or mid to late January. Okay, this is when Flamethrower LLC was announced, and that they retained the services of Wes Christian. Now, next, we have, so as you can see, we have Flamethrower, we have Metamaterials, okay, separate entity than Flamethrower, totally different. Metamaterials is a publicly traded company, and we have Next Bridge Hydrocarbons, which is a private company, right? And it's a private company that you can't buy shares of, you can't sell shares of, because the stock doesn't trade, right? Next Bridge Hydrocarbons stock is a stock that never traded. And Flamethrower are a bunch of shareholders who are investigating the issue with the fact that Next Bridge Hydrocarbons stock never traded. These are three separate, distinct entities. Okay, each is different. So, what happens when these? So, what happened yesterday? Yesterday, we had this press announcement from Metamaterials that I went over, right? And they said that Metamaterials has retained Christian, Smith, and Jewell following the ShareIntel trading analysis. Okay, Metamaterials is separated from Flamethrower and is separated from Next Bridge Hydrocarbons. But Metamaterials is run by this guy, George Palikaris. He's a scientist, first and foremost. He's the CEO of MetaMaterials, but first and foremost, he is a scientist. That means he is skeptical by nature. That also means that he only makes announcements when he is completely sure of what he has to say. And that means he's done, and as a scientist, that means he's done tons of experiments. The data is repeatable. The experimental results are repeatable. He's not going to say a single word until he knows he can back up what he has to say with tons of evidence. So, what that means to me is that when George Palikaris comes along and he says that there is a ton, when George Palikaris says that he's gotten together with Wes Christian and he's made this announcement, he believes that he has enough evidence to back up his announcement, to make good on what this means. So do not take this lightly. So at this point, let's compare the two companies, MetaMaterials and Next Bridge Hydrocarbons. Again, I said everything's a separate entity. Let's just see what the differences are. Let's look at Next Bridge Hydrocarbons, right? Next Bridge Hydrocarbons is basically, they've got less than a dozen employees. They're mostly contractors and advisors, which means they have a very low burn rate. They're not going to spend a lot of money, except for this thing called a continuous drilling clause, which means that they have to drill a set of new wells every year until they go into production, in which case there's a different drilling clause. But in order to maintain their lease agreement, they need to be continuously drilling. And that's a big deal. So, and furthermore, Next Bridge Hydrocarbons is a private company. What does that mean? That means Next Bridge Hydrocarbons is not tradable. They're publicly reporting, but they are private in terms of you cannot buy shares of Next Bridge Hydrocarbons. You cannot sell shares of Next Bridge Hydrocarbons. You cannot further short sell shares of Next Bridge Hydrocarbons. Let me repeat. Next Bridge Hydrocarbons does not trade, which means you cannot buy, you cannot sell, you also cannot short sell, right? You cannot short sell Next Bridge Hydrocarbons. Big deal there. Compare that to MetaMaterials. MetaMaterials has over 100 employees. Okay, they have tons of PhDs, postdocs, etc. So they have, by almost the nature of the business, they have a much higher burn rate, and you need that to develop nanotech, right? They have a very high burn rate because you got hundreds of postdocs that you're employing. You got, the technology is it's just the way it is. Okay. Now, MetaMaterials trades under the stock symbol MMAT, which means you can buy shares, you can sell shares, and you can short sell shares, which means it can and likely has been naked shorted, right? So MetaMaterials can be naked shorted and has been for quite some time. It also means, because you can short the shares or naked short sell the shares, that you can reduce the share price significantly. And what happens when you reduce the share price significantly and you're a company with a very high burn rate? Normally, if you're a company with a very high burn rate and you reduce the share price, that limits your ability to raise capital, to raise dollars in capital markets, right? You want to sell shares in capital markets in order to support your high burn rate until you have a product that you can release and make money from. That's the whole business model, right? You burn money up until you can make a lot more money. That's the business model of MetaMaterials, okay? But because they're publicly traded, because they have a high burn rate, shorts are out there and will want to limit the ability of MetaMaterials to raise funding. They want to limit and if they are successful, they can prevent MetaMaterials from raising funds in order to prevent them from getting access to capital markets. Preventing MetaMaterials from getting access to capital markets, that's illegal. Limiting their access to capital markets, shouldn't be doing that. That's another illegal activity. Okay, that's the primary differences between these two companies. One's got a high burn rate, one's got a low burn rate. One can be shorted and naked shorted, and the other one cannot. It's just the facts of life. And finally, we got Flamethrower. Flamethrower is totally different than any of these. This is a bunch of investors, right? John Berta McCabe. This is a bunch of shareholders, right? They're independent shareholders. They got together. They said, you guys are naked shorting the stock and sending it into oblivion. This is just wrong. You're harming us as shareholders because price discovery is now broken. Totally different scenario, right? Totally different scenario for each and every one of those. Totally different perspective. And that's an important thing, okay? Finally, Metamaterials needs money, right? Metamaterials needs money because it is in a high burn rate environment. It cannot afford to waste money, right? They got to pay employees salaries day in and day out. So they got to pay salaries. They got to pay employee salaries day in and day out. And they have seen the they have seen the ShareIntel data. I haven't seen the ShareIntel data. I have no idea what's in it. I believe that there might be a ton of naked shorting going on, but I haven't seen the ShareIntel data. But Metamaterials has. And this is, or rather, George Palikaris probably has, right? He's the CEO of Metamaterials. He's seen that data. And he thinks it's significant. And he thinks it's significant enough that he should retain the services of Wes Christian's law firm. Not only does he think it's significant enough to obtain the services of a law firm, it's significant enough to announce that he's obtained the services of a law firm, right? And let the public know about it. Let his shareholders know about it because he thinks it's a big deal. And again, when a scientist sees data or sees a whole bunch of data and it's been analyzed, and he thinks it's big enough for him to make an announcement, that's a big deal. It really is. It's a big deal, just from that perspective alone. The fact of the matter is that Metamaterials stock has been harmed. The price went down significantly, right? It went down significantly. It's down 23 cents. It's down to 20 cents or so. I haven't looked at the stock price today. But it used to be $21 a share, right? So it's gone down by a factor of 100 to 1 by short sellers. That's a big deal. It's a big deal. And it's limited George Palikaris' company's access to capital markets. Because now he cannot raise as much money, or he would have to sell a lot more shares in order to raise the same amount of money, which would result in a significant amount of dilution to shareholders, which would harm his company and harm his shareholders, right? That is a big deal. So it's big enough that, after him seeing the data, that he's obtained the Wes Christian law firm. That is what I think is significant here, okay? So again, we got 3 entities out here. Each have their own different perspective on things. Each have their own motivations. They're all different, but they're all tied through a common history, right? They all share the same common history. I think it's a big deal. I don't know what's in the Wes Christian information, but I do know that it's been quite some time. It's now about 6 months later, and it's been after all this time. It's a significant amount of, they may have finally got enough info together to do what I mean ShareIntel. ShareIntel may have finally got enough info together and analysis together to do what they do. And what is it that ShareIntel does exactly? Okay, let me go over that. So this is from the ShareIntel website. As we can see, what they do is they are an intelligence gathering firm. What they do is they gather data together and they analyze that data in terms of stock trading data, and they find enough information that it can be taken to court, brought before a judge, to stop abusive naked short selling. Okay. They've got a step-by-step process. They take all the data as needed. They get statistical information as needed. They can identify particular individuals just from the trading data alone, and they can bring court action against them. And they've been successful. Okay, West Christian has successfully used the ShareIntel data in the past against big law firms, as was stated in the MetaMaterials press release, and again against big Wall Street firms such as Goldman Sachs, Merrill Lynch, etc. So that's a big deal. ShareIntel has been successful in the past. They have a track record. Their methodology for obtaining the data and identifying the entities responsible for the abusive naked short selling is, it's unparalleled. It's quite good. They've had 6 months since January, and now is the time that George Palikaris believes is right, so he can spend the minimum amount of money, conserving whatever money he has in metamaterials, to bring action against the abusive short sellers, through the use of ShareIntel data and through the West Christian law firm. Right? This could be big.